Hi, this is Kirk with Forex Strategy Secrets, and today we're going to give you an overview of the 15-5-1 trading strategy. That's the 15-minute, 5-minute, and 1-minute. We'll go into detail on that, and so don't get concerned that it's just smaller time frames, because you can use this on larger time frames as well. This would be an interesting concept that you haven't probably heard or talked much about. So topics that we're going to be covering, and that the strategy covers also. We're going to kind of touch on them a little bit here, so you'll see the power of this little strategy. To determine the direction of the trend you should be trading. Now there are a couple of things. You can just look at it quickly and know which direction you should be trading. That's extremely important. But there's also counter trend trades. So when that setup happens, you know that that's a good setup for the counter trend trade. And then there are setups that you'll be looking for. So we have the counter trend and the setups for the counter trend. 5 scans for the 15-5-1. Now the Norwood Strategy Scanner has the 5 scans, and you can set all of them or part of them to bring you scans. And we'll go through that a little bit later. And then when the 15-minute gives you a setup, there's certain things it's looking for. And the 5-minute and the 1-minute also have certain things that they're looking for. So when all that matches up, then that's when you would be receiving a scan. You can see these setups happen even a little bit before the scan goes off, so you can be heads up, so you'll know what's going on. The scan just brings it to your attention to make you aware that yes, things were set up at that time. Now there's default stop loss and take profits. The default stop, we say probably never change. That's just, if you do that, this is kind of a money management thing, and that's part of the course. The take profit, you can set that. You can close the trade before it hits your take profit, or if it's moving really quickly, you can move that take profit away further out, so there might be more potential take profit, and then manage the trade from behind. There are daily pip targets that we talk to in this strategy. This is a strategy to help you make money, and then we share with you how to figure the lot size. What size lot should you have based on what size of account you have? How to increase that lot size as your account grows. What if you have a losing trade? How to adjust it back the other way also. Maximum number of trades that you should be taking at one time. How to choose currency pairs that you want to trade. I would suggest you don't need to have all the currency pairs. There are 25, 28, depending on your broker, that are possible to trade. But there's probably 10 or less that are moving a lot, and those are the ones you want to be trading. They're the ones that move a lot, not just because you saw a setup on a currency. Does that mean you can't make money in the other currencies? No, you can, but you're more likely to make pips faster if you're trading the currency pairs that move the most. And pairs that move the most, that's what you want to look for. And how to tell if a trade is fresh. That's extremely critical. If a trade is not fresh, wait until it goes back the other way and then comes back fresh again. That can be just as good an entry, but you don't have to go through that drawdown. How to tell if a trade is late. These are kind of related. If you can tell whether it's fresh, then you should also be able to tell if it's too late to enter it and you need to wait till it recycles. The highest probability trade setup, and I'll show you what that looks like here. It's totally amazing. When you see that, it's like bells ought to go off and fireworks, and it's an amazing thing. And I'll show you in the chart what it looks like when that happens, and the indicators tell you that it's all set up. Then you can see that almost every time following that, there's a decent trade. There's no guarantees of 100% of anything in trading, but a very high probability. There are 2 ways to manage your trades according to how we suggest it. There might be a third one that you can look at also. What are the 3 moving averages? We show you how we work with those. We also have trade examples in this strategy that we share with you, and we'll have more of these live recordings of trades that were taken, and as they developed, I get busy in taking a trade and forget to record it, but we will have more live recordings of trades that I've actually taken. You're seeing them live, you're seeing them happen click by click, and how they're managed. Daily pip counts reported. Now these are things that in the Pip Club, the traders will announce, well, I made this many today, or I made this, or I had this many pips I just took out of that trade. And I'm just going to list some of them. These are numbers that I've heard called out. No order. It's not necessarily they happened all in one day. They didn't. This is over a period of weeks. The people are calling these out. And I could just list them all along. So you can see that there's some pretty decent pips. Now the Pip Club only lasts 2, maybe sometimes 3 hours if we get going on it. And you can see that the pips, there's some pretty impressive pips being taken during the Pip Club. Some of them because people are following along and taking pips based on what one of the other traders calls out. Sometimes they see it and they're the one that's calling out the trade. So you can see that there's all levels of pips that people can be taking. So now let's go to the charts and show you what we're talking about. Okay, this is a 15-minute chart. And I just picked this pair because it gave a lot of examples, and we could possibly look at some others to show you what we're looking at. First of all, how do you determine the trend? There are 2 indicators on here that give you a big heads up as to which way you should be trading. Now, if it's a counter trend trade, of course, you're going to get other indicators that are on the wrong side. So I'll give you a little hint. This moving average right here, if the price bars are on one side or the other side, that's the direction you should be trading. There's another indicator that talks about that also. Right here, I would consider a counter trend trade right in this area. See, it's on the wrong side, and it says it's going short, but I would consider a trade right there. It only went 32 pips. Well, that's a nice little trade. Total, it went over 60 pips for that little area right there with a hesitation. So that's one thing you can look at. What is the main thing to look for to consider a counter trend trade? Well, we talked about that, and I showed you what I would look for as one of the setups. That's it right there. You don't know what it is, but if you've traded with this, maybe you can spot what I'm talking about and what I'm looking for. There are 2 setups that you need to have on the 15-minute time frame before you might want to consider a counter trend trade. And so we go through that also in the course. Now, I'm going to, okay, here's the scanner dashboard. And I talked about 5 scans that we have. I have checked 4 of them that I like to use. This other one I use specifically on certain pairs when I see things starting to set up, then I will click that on just one of the pairs. These are the pairs that I trade. They're not the only pairs, and they're not necessarily the best pairs, but they are the pairs that I choose. They move more than most of the other pairs. And so you have these scans. There are other scans down here that you can choose from. Then there are other settings as we go down. You want to remember saddles. We have AO saddles and Mayo saddles. Those are some scans you can then set for the saddles to pop up, and we'll show you saddles in a moment. Now this is a strategy. Now it's a strategy designed to make money. And so what we do is give you suggested stop losses and defaults. And I'll just draw a line on here. Say that you had taken a trade. Let's just say you've taken a trade. I'll draw a vertical line over here. We can obviously see that's in history, so we can see. But say you're taking a trade right there. I'm not going to tell you what they are, but I'm not even going to know if this is the right amount or not. Say that was the default stop. You should always set that stop no further than what we suggest right there. And your take profit should be out. When you first take it, set those. That way you're going to have your maximum risk protected, and if it moves really quickly, you'll get taken out at at least some profit rather than it goes up and it comes back down on you and you didn't get any profit at all. So that's what you should set. Now, say the trade moves in your direction. Well, there's a point where you want to move your stop loss up to protect some profit. And at that point, if it's moving quickly, you may want to move your take profit out to give it a chance to move. And as it moves, you follow it with the stop loss. So you're protecting, like this is an example of about 25 pips you're protecting, and the take profit is way out there. If you're protecting 25 pips, I don't care if you put it out 300 pips because you're really managing it from behind. And so that's one of the things we talk about, is how to set those default stops and take profits. We suggest that you shoot for a range of daily pips. If you were to get this range of pips, there's a minimum amount and a suggested target. What if you get more than that? That's fantastic. What if you don't get the suggested target, but you get less than that? Then that is a great thing to have happen also. You'll make a lot of money just getting the suggested minimum range of the pip targets. Then we talked to you about how to set the lot sizes, what size lots to set based on the size of account that you're trading, and how to figure that. So what we're doing is we're setting the lot size really high, looking for a small number of pips per day, not hundreds per day. You may get that many one day, but looking for a smaller number of pips, larger lot sizes, you'll actually start making more money than you have in the past. At least that's what most people are telling us. When you get into some trades and they're moving and the market's moving fast, there's a point that you probably shouldn't take any more trades. And so we share that with you. If you get too many trades on, you can't manage them, you'll let one will slip and get away from you, and then it'll go down and maybe take your stop out where you could have closed it shy of the stop, or you weren't letting them go to their maximum profit. And so there's a number that you should not trade any more than that in our suggestions until you get really good. Then how do you choose the currency pairs? I've kind of alluded to that. Choose those that move the most, and choose the pairs that are have the lowest spread on them. That's the main thing that I look for. Sometimes I'll take some that have a little higher spread because the setup looks so good. How do you tell if a trade is fresh or not? That's the biggest thing that people have a problem with. They say, oh, there's a setup. There's a term that I want you to listen to. There's two. The 4-bar and a saddle. Now there are 4-bar saddles. That's stronger. But a 4-bar saddle can happen and it's late, meaning that you might get a few pips, it might go sideways, and then it could turn on you. So you want to make sure that that is fresh. And how do you determine that? These indicators here tell you all kinds of information about how to determine whether a trade is fresh or not. What's the setup that has the highest probability of making pips? Okay, I'm going to have to go through and find one of those for you in just a moment. What are two good ways to manage a trade once you're in it? Well, there's a couple of different ways. When you first take it, you take it on one time frame because that's a good entry, everything confirmed. But we suggest maybe you move up one time frame to manage it. When you get some signals on that larger time frame, then you can go back to the smaller time frame and look for some exit signals. Those are some things that you can do to manage a trade. That's all in this little strategy course that we're talking about. There are 3 moving averages. Now you're seeing some moving averages right here, but they're additional moving averages. You haven't seen the other moving averages because they appear on the smaller time frames. So I'm going to put this anchor, I'll put it right here in the middle, and I'm going to put a vertical line so when we go to the smaller time frames we'll be able to see what's going on. You see another line right here that has some big importance. Let's go back to that 15-minute. Okay, would you have taken a trade short here? Possibly. Would that 5-minute confirm that? Definitely. Let's see what the 1 minute does. Would that 1 minute have confirmed that as well? Yes. And so if you take a trade up here or right here, now we're looking at it in history, but you'll see these things once you see what's going on. There was a 24 pip move there, or maybe a 10 or 15 pip move right here that you could have taken out. And so you look to learn to use these moving averages that we have on the charts here to help you know which directions to trade. Right here on this 1 minute time frame, notice that the price bars are in between those 2 moving averages. That may be an area that you would not want to consider trading. That's another heads up saying, oh, that's things are going sideways there. So I'm going to put another vertical line right in the middle of that. And I'm going to go to the 5 minute. What's it doing? Well, it's not in the middle, but it's a counter trend trade. It's going back towards the, if there's a down move, it's going back up, so that's a counter trend. Let's look at the 15 minute. Well, the 15 minute says maybe you don't want to trade there either. Look how sideways it was going. So it all starts making sense. It's all clear to you when you start seeing it. Let the tools bring trades to your attention. Okay, so what I'm going to show you is the setup of what I call the perfect trade setup. Now, it's a 4-bar is one of the things you want to look for. I talked about 4 bars. That is one of the most critical things that you can be aware of. Are all 4 bars good? No. Are some 4 bars late? Yes. Here's a late one. That's a 4-bar. It's late to me. Now, you could manage that. That still up to that point was about 30 pips in that range, but look how sideways it was going. So you can take those or not, but after it's been going for a long time, it starts to become late. Take that off. Okay, now we've looked at the 15. Let's look at this 5 minute. That's the perfect setup. And we want to look at the 1 minute, see what it looks like. That was perfect on the 5 minute, but the 1 minute doesn't have to be perfect, but that's a better entry right there. And just that little bit was a 20 pip trade. Why is that perfect? Saddle, saddle, 4-bar. Double saddle 4-bar. That is one of your perfect setups. Many saddles are good, but the double saddle 4-bar is the best. You can make a trade on a saddle. Here's another saddle right here. It's not a 4-bar. Did it take off a lot? Oh, it went about 10 pips, come back against you about 5 pips, went sideways for quite a while, eventually made 15 pips, come back against you. That's hard to trade when you're doing that kind of movement there. But if you had gotten in down here, and that went to 25 pips, it came back down, then maybe you could ride through some of these moves right here. Maybe not, maybe get in and get out. But put in your mind, if you ever have all these indicators, sign up for the scanner, then you will be able to start seeing the perfect trade setup. We just finished looking at the charts, and here are some trade examples. These are trades that are taken using the 5-15-1 strategy. This was a what? It was a counter trend trade. And there's some setups here that to me it looks like it was a good trade. And profit-wise, it did turn out to be a good trade. Here's a trade. Now notice this trade that was taken. Was it taken in the direction of the trend? Well, definitely. And so if any of you don't know where the trade is, it's over here where these little dots are on that particular one. Here's an example. A trade was taken, exited the trade, got back in the trade, and it went on down. This trade in both instances, my opinion, was a good trade, but I think it could have been a better trade had you waited till it was fresh. To me, it was a little bit late. If this trade right here, if you had taken it when it was fresh, you would have been taking it right over in here, and that would have been a few pips more. You waited a little bit, but it was even better. This trade, you had to wade through all this negative stuff. So right over in here would have been a better place to take that trade, and that's one thing that I look for a lot, is it fresh. Well, these were good trades, but they weren't fresh, but the momentum was so strong on the other time frames, that's why the trader took them. Here's 90 pips on a 5-minute chart. Have you ever thought that's possible, that you would even find something like that? Well, there's a saddle right there. That was one of the heads up. It says right here, saddle. That's what brought this thing to his attention. And then he took the trade. Here's another saddle sell. This is only 39 pips. Here's this is 195 pips. I don't know that I would have ridden it down that far. I probably would have closed it out here, probably for the 100 pip range, instead of having this drawdown. But that's what that trader elected to do. And it was this saddle right here that gave him heads up, and then he checked the other time frames and took that trade. So you can see that the strategies and the saddles and the 4 bars, what kind of pips you can get. This is a trading strategy you can use to actually make pips. We've had people tell us that have been exposed to it, that they do not have any of our other course material. This is the only thing that they are aware of, and they're actually making pips. Then the traders that only have the 1551 course, they are actually making money. But if the traders that have our nth degree course and the 1551 strategy, they're even making more money because they see some other things set up. So the 1551 strategy is straightforward. It's easy to learn. It's specific trading setups to look for. And I showed you the best one. That's the ideal setup. There are many others that are really good, that are going to be profitable, but that is like, if you see that one, you probably need to jump in and take the trade. A step-by-step method of trading. It's not vague. There's no guessing as to what to do on the trade. It's straightforward. If you follow the simple rules, trade in the direction of the trend. If you do a counter trend trade, which is against the trend, follow the 3 or 4 rules to do counter trend trading and keep fresh. If you just do those things alone, then you're going to be really successful using any strategy, but this one in particular. You can get your copy of the 1551 Trading Strategy course for $500. At first we were thinking about a lesser amount, but we see the pips that are being made, and I'm not going to give it away. This is the best thing that we've ever come up with, seen in the market. It may seem like a lot of money to people, but if you're going to make money and turn your trading around, the $500 is one of the best investments you'd make, is this 1551 Trading Strategy course. You'll get the complete course, and you get 2 months of the scanner. And I showed you the dashboard of the scanner that helps to bring trades to your attention. And if you'd like, this is not part of this offer, but if you would like, think about it. You can get some strategy coaching as well. To get your copy of the 1551 Trading Strategy, copy this link and put it in a browser, and then the order form will pop up and you can order your copy. And if you have any further questions, you can contact Jed or myself at jed@forexstrategysecrets.com to start actually making pips in the market. Tested people that have only had this strategy, 1551 strategy, and they all of a sudden turned their trading around. Are they getting better? Yes, they are getting better. So this is one thing you can do without having our full course. It'll be a lot shorter, quicker to learn than anything we've ever shared, and yet it's fantastic. The simplest thing, and yet the most precise timing that you have in getting into the market.